What happens after the Standard & Poor's or S&P 500 rallies 20% for 15 weeks? Gary Glover is here to tell us, along with the shares that he's trading for this week on the ASX. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
I was happy to read in your week's report, you shared this statistic, this insight that you dug up, and so what do you see?
Well, it's interesting when we look at those indices, like the NASDAQ's up 27.61% in the last 15 weeks. So although that is the only indice, the US index, which is sitting below the old high, that actually has been the strongest move out of that October 23 low. So that's been the biggest gainer here the last 15 weeks. The S&P's up 22.5%. And the Dow's up just under 20%. So all had some big moves there. But I did see a really interesting stat during over the weekend there, talking about, like, this is the only sixth time in history, according to a CMT who published some sort of stats there, but saying that this is only the sixth time in history that we've seen the S&P rally over 20% in 15 weeks. It was pretty interesting to look at what actually happened post that. So according to his sort of stats there, all those indices had like something between like a 4 to 8% pullback within the next 2 to 4 weeks. But 12 weeks later, all those indices were all back in positive territory. So just kind of, which it kind of marries up with, if you think about, we had the Nikkei there last week. And like, once it break to a new high, because it's different from stock. When stocks break new high, sometimes they can really run on. But an index is like a big basket of stock. It's a lot of things that are going on. And you've already had a big gains here. So we're talking about, 20% gains, probably twice the historical average in a 15-week period. So you're getting monster moves here in a short period of time. So we expect some sort of consolidation there. So the Nikkei went to a new high within 4 weeks, pulled back in that case, it's about 19-week pullback, but a time-consuming pullback there. If you look at the election year cycle, it's pretty choppy. Early strength, like a late January, maybe early February high. Not many get this far into February without pulling back here. Normally, the first quarter is pretty choppy, and then usually the second half of the 24, the second half of the election year, is kind of more bullish here. So the stats and the cycles sort of suggest we might get a little cooling off here, a bit of a pullback. We're probably just going to pull back to that break zone, and then recover again, and then go so strong here. So yeah, it's just interesting. That's obviously been a really, really strong move here, but everything does suggest here short term we might get a little bit of a congestion or a little bit of a cooling off, but any sort of I think anything sort of 5 to 8% pullback there is probably just going to be, time to sort of add back in really. Looks pretty positive for the second half of 24 here. So just, pretty interesting sort of stats there. Just kind of marries up with what we're seeing there, and just normally how indices sort of go. I guess the only outlier there is the Aussie market. We've probably been a little bit underwhelming, only 14% the last 15 weeks. Still a pretty decent gain for the Aussie market again, but probably like to see it go a little further, a few more weeks above here, but that may not come. But probably at this stage I'll probably lean towards maybe go slightly higher here first before we get a congestion. But I guess at the end of the day, if the US market starts to pull back here by the end of the week, we'll probably likely follow.
Well, it's nice to see that sort of synchronicity with the reports of cycles and the stats that you're looking at and what you were talking about with the Nikkei before last week. What I did like in your report is that you did say, although I expect to see consolidation soon, and you've just covered that on the markets, you said, I still think plenty of stocks can go higher while this consolidation is occurring, and particularly outside of the top 50. Before we jump into the ones that you're identifying, can you just explain how that can happen? You can have plenty of companies going higher while the indices are consolidating. How can that work?
Yeah, so I've had plenty of stocks go lower here while that market's gone higher. So, I mean, just thinking about like the lithium sectors for one, obviously gold stocks have sort of pulled back here recently. Maybe even energy as well, sort of pulled back in that sort of September through to December. So definitely been some sectors there that have really cooled off while the index has been, sort of running in. So, and if we go through a bit of a consolidation, Chris, as well, like I think it might be, look at that Nikkei there, it was like 19 weeks there. It was a pretty tight, even though it was sort of downward, it was more of a sort of a sideways to sort of downward consolidation then, which took a long time. So maybe we might use up as much time here, but maybe we'll just use up, maybe 8 to 10 weeks. So maybe twice the time here. So maybe if we rally, say 4 or 5 weeks higher out of the break zone, then maybe we pull back twice the amount of time and don't come back so much and then build again and then start to move higher there. So it's interesting there because if we look through the election year sort of cycles there, the predominant pattern isn't playing out at the moment. The less likely pattern is, and the less likely pattern actually calls for a fairly, like the 2 or 3 times we've actually rallied pretty hard into February without much of a pause, we've actually got a pretty sharp pullback into March, and then just kind of a reset and then start to go again. So there's only been sort of 3 out of about 16 sort of that did something like that, where most of them sort of were pretty choppy the first quarter. So yeah, maybe we'll just get a little bit of a, after we find a peak here shortly there, we might just sort of get a, time-consuming sort of consolidation and then move higher.
Well, as you're talking about those consolidations, the indices, the heavyweights, the BHPs, the banks, those kind of companies, if they sort of consolidate and have this pullback that you're talking about, you mentioned earlier that there are some segments of the market that have been left behind since these October lows, these last 15 weeks.
Yeah. So on that point, Chris, as well, it's probably worth noting there. I mean, some sectors, some stocks here have had some massive moves. Yeah, like the banks for one, really had a pretty big move there. So they can't. So I mean, for the stocks that have probably got no growth forecast for the next couple of years, there, you'd expect at some point for them to sort of consolidate, pull back. And if the market's going to have a bigger move here in the second half of 24, they're going to have to sort of pull back and find a higher low. So other stocks are going to have to do some sort of heavy lifting. And so as some of those stocks that have been pretty hot cool off, other sectors will do a bit of lifting, and that'll sort of, index might pull back, but it won't pull back as heavy as some of the leadership ones there. So we should just get a bit of a mix there. So there should be some rotational move there. So probably the sector stuff there. I mean, that your report you're building there, looking at what sectors are sort of showing relative strength and which ones aren't, and which ones are weak there. I think you'll start to see some rotation through some sectors here. So hopefully we'll get we might get a sector or two might light it up here in the next few weeks. And they might be sectors which sort of will do a little bit of lifting for the market, while the rest, maybe 2/3 of the market will correct here, and 1/3 will do a bit of lifting there, and that'll just sort of keep the index sort of more neutral to sort of maybe just a slow consolidation there. So definitely get those rotative sort of sectors there. And not, if you look in the past as well, we've often, there's plenty of years in broking there, Chris, where, financials were hot and resources were not. And then once the sort of, once the financials have sort of run their race and they cooled off, and then all the money would sort of switch back into resources. So there was often a shift from financials to resources. That trade was, I remember for 3 or 4 years in a row, that trade just kept happening over and over again. Whereas, you just play one of those two sectors, like they weren't strong at the same time. Whereas in recent years, we've seen maybe the rally together, but it's not always the case there. It's definitely some sectors will sort of, should mixing it up here.
Well, it's we've definitely seen in the past where something like, say, Commonwealth Bank or NAB is down 0.5% the index points that contributes can completely offset a mid-cap miner that's up 15% just because of how big those companies are. So as you're saying, they might flatline or pull back a little. We can have other ones really come to the fore. So when we're looking at the trading shares in this week's report, the first one you've got in here is PLS, Pilbara Minerals, which you're talking about mining, you're talking about lithium. This is the weekly chart. So what is it that you're seeing on the weekly? Is it sort of mostly around this Fibonacci retracement from the low to the high and how much it's pulled back of that range, or is there more to it?
Yeah, a couple of things. And obviously, we have sort of come back to that sort of 61.8 sort of fib level there. That's kind of where we've been bouncing off. And we've had a bit of a bounce up there in the past. I did really like the look of that low here in at the end of the year there. I think it's sort of been sort of end of November there. That's a real sort of good clean sort of washout there, almost very exhaustive. And we saw big volume come in the market there over the next 2 or 3 weeks. So that's kind of like, you've had the downtrend there, and then finally the buyers step in there and start to wade in there. Sort of signs of accumulation there. So we had a bit of a bounce, come back and retested that low, put a higher low in. Again, started to see some better volumes again. And now we're sort of, we're starting to build here. So we've sort of got a low there, we've got a higher low, a second higher low. So it might have been building, like the 0, 1, 2, 3 pattern we talk about, sort of like building a bit of a base here. So, but good sort of price action, good volume sort of characteristics here. Just starting to see a bit of a base building there. And we just know here that, these sort of, obviously these EV spaces, it is a long sort of platform, long story here. It's had a few deep, large corrections over the last sort of, probably 5 to 10 years. There's been probably, 2 large corrections over that period there. So this might just be sort of the third correction again. And this, so there's definitely a sector that could potentially sort of light up again. And, it's like, if you saw it in the last year as well, like I think in that might have been in 22 there, Chris, there was just so many rare earth and lithium cobalt plays coming to market. So I reckon about 50% of the IPOs in the market were all in that mineral resource sort of space there. So just saw so many players come to market. So what happens there is you almost get more supply coming on, and then that will sort of impacts prices there. If it's happening here, it's happening in other markets as well. And so, it just causes the price to come back there, and it makes that, all those low cost players sort of price them out of the market there. Only the lowest cost producers there can sort of survive there, and they're the ones that sort of, around the next day. If I'm with the mining space, we've learned over the years, it's hard to sort of start. You can turn them off in the day, the mines, but to start them back up again, there's a lengthy process. All the OH&S, all the sort of safety sort of stuff there. It's just, it's a really expensive process to sort of kick up starting again there. So it really does rely on where the commodity price is, and it's got to be, it's got to be productive from a cost price point of view. So oftentimes these things, they move into sort of negative cost territory. You can't make any money. They'll be shut down. So much slower to sort of start back up again.
Yeah, definitely. Unless they're on the care and maintenance, if they go the mothballs, it's very difficult. And quite often we see those tenements change hands and come back as that one asset comes back as a new listed company. But in that same space, one that we have covered a fair few times before, we know back in this area that they kicked off a lot of the VCPs back in 2020, 2021. Liontown Resources, still in the lithium space. This one's had a significant drop way back down here. What is it about this chart that's made its way into the report?
Yeah, it's the sort of Ingenia there. What's that? 80% have the 50% drop, the leading stocks, and then 50% can have that 80% drop there. So at 320 down to 87.5 cents, a fairly, it's a massive sort of correction there. Just interesting where it's come back to, Chris. That 87.5 cents, that's kind of a 2022 low, and if you think about, if anyone who sort of studied Elliott Wave there, they talk about the wave 4 zone, sort of. So your fifth wave, which ends up being, it's like one of your biggest sort of moves. When it's done, they often come back to where it all started from, which, and I've seen this quite a few times in history. Those leading themes there, once the last leg's done, they often pull back really large. It will surprise everyone when it starts to sort of bolt down. A few times I've suggested, hey, look, this could come back all the way back there. I thought it was crazy. But seen it before happen quite a lot. And in this case, it's done exactly that. But this is often where they bounce from as well. So, and they can get a reasonable bounce from here. So interesting, we've seen the volumes increase. I think we saw a little bit of a bounce off that level, come back and retested it, made a little false break on the daily, and then had a pretty nice sort of bounce here. So seen some pretty good volumes there, Chris, as well on the bounce. And so, yeah, probably want to see maybe some little, have a bit of a bounce here, maybe want to start to see a few high lows, some consolidation there with some lighter volume, but really interesting level of bounce off there. I've sort of got a bit of a starting position, but if I start to see some low volume consolidations there, this is definitely one I think you can probably add to there. I think there's got a bit of upside potential there. Good risk reward there on the upside.
Well, that's one we'll definitely look for from sector sister support in the industries and themes. As you're saying before with Pilbara, it could be one that lights up again. Back into the tech-based side of things, Life 360, this is one that you've traded exceptionally well in the past, and we've seen a lot in this report when you've traded and traded well. What's happening here? Looking at some sort of timing here, some levels. What's
interesting right with this one? We're talking about some of that sort of top tiers looking a bit fully value. Some of the growth stocks started to move there. So I think we've sort of featured Aussie Broadband. I think we saw we just saw Ordinate had a big jump there recently. MP1 sort of gapped up and ran. So quite a lot of those growth names are sort of starting to sort of pop out of the ranges there. And as the Aussie growth names have been lagging a little bit compared to the NASDAQ there. But yeah, just starting to see a feel of it. Just notice there, look, the 360 did come back a little bit below the previous high, but prefer to sort of see it sitting above there. But we have started to see a bit of volume there. Has broken a swing high too on the way down, which is kind of positive. So, I just think, this is at this stage there, probably, I think the top 50 is pretty fully valued for Mind here. Hard to find super value there. I think some of these sort of growth names there with inflation coming off will get a bit more support here. And it's just seen a feel they've already do pretty well. This one looks pretty good there. The only thing I'm mindful of is that I noticed that first lower high there was sort of 90 days from the high and then it reversed. So I'm just probably watching that 15th, around that 15th of the next couple of days. Just got to watch that date there for a possible reversal. But this stage still looks pretty constructive. Just going to be a little cautious there. But sometimes I've seen plenty of these timings. In bull markets, the timings can be deceiving as well. They can give you, as I mentioned on Friday there, that sometimes the Gann and Elliott Wave sort of theories can kind of get in the way of price action there. Look, the other day the price action sort of strong. You might get some reaction there in the short term, but not too long. Just got to respect the chart price action there. And at this stage, it still looks quite positive there.
Well, the next one in your list, if we move through, still in sort of technology space, but a lot more of a mature company, looking at good positive revenues soon. Xero. We've got the Fibonacci levels here once again. So going from the lows back in October 2022 and the highs that they hit sort of around July 23. Calculating that distance from low to high, the retracement shows that we're sort of coming back towards that 50%, but didn't get there. So what are you looking for? Is this one more of the overvalued ones at the larger end or more on the growth side where it could have a bit more run?
Yeah, I think it's sort of more on the growth side. They're sort of been building quite nicely. I think the volume characteristics are sort of pretty positive. Just keeps hugging that sort of 50 week there, which has sort of been a bit of a level in the past as well. So did sort of climb that, at 50 previously. So, just like the way it sort of keeps finding support there. Kind of one of the growth names there that's sort of coming into, has reached sort of break level already here. So I think we're probably going to be coming into, first profits there for Xero. But just sort of one of the stronger notes. Not getting incredibly, there's some okay volume at the low there. The kind of volumes have been sort of modest here so far, but as they get, I think these sectors are pretty interesting for Mind there. I just think this is where I'll be looking here. Still got to have stops in place just in case we get a little bit of pullback. But I've sort of just been playing some sort of smaller growth names here. Just because I think these ones will sort of give you, they'll kind of run their own race a little bit here. And we're just sort of seeing some other growth names that will sort of pop up here.
All right. Well, another one that we've looked at a few times before, Ramsay Healthcare. Ramsay, what's happening with it now? Is it 0, 1, 2, 3, 4? Is that
Yeah.
that
It's
happening?
a massive base here now. So we've got that washout, first high low, second high low, third high low. So even on the daily now, we've got a fourth high low. So the price action is really tightening up, congesting there. So, really, really tight here in recent weeks there. So I think the volume characteristics are still pretty positive there, but is tightening up here. I think what we want to sort of see there, Chris, is basically take out one of these highs there. So most recent high there, I think it was around 52.22 in January. So I think if we sort of crack that high there, that'll be a good sign there. It's sort of almost like a little bit B wave break, but do like what I'm seeing there. Just volume's okay without being great, but we're definitely sort of seeing every time it sort of sells off a little bit, definitely seeing that bit of a reversal on some good volume. So yeah, just that volume characteristic just sort of starting to turn a little bit more positive for me, and just love the tightening price action there. And if it gets a bit of a move here, then I still think that healthcare is going to be a good sector to be here for the next few years. Feel like, there was a bit of corporate action there last year. It's all gone quiet, even though the prices were all much lower. So I still think that's a sector which might, I think one sort of good corporate transaction deal in the sector might light the sector up here. So just one to watch here.
Okay, well, Virgin Money, VUK being the ticker. This seems to be a bit of a consolidation, possibly a half-decent pattern building in here. Is that the main thing that's...
Yeah, got that big VCP pattern there on the weekly. So again, the price action all sort of tightening up. This one looks actually more encouraging that on the volume side there. Like the volume definitely is a lot more pronounced on those sort of up weeks. And the volume a lot lighter on the pullback. Just look at that last 3 or 4 week pullback earlier in the year. There's just no volume in there. So very light pullback. Even though it's sort of come back deep here. But it is a stock which does, it is a bit of a high beta play. So it definitely will, it does move up and down a little bit larger than normal, but that's normal for it rather than not normal versus the market. So, but yeah, just like the fact we're sort of getting a few high lows sort of there, some better volumes on the up there, cracking 320 back above that little first high low, that's going to be a really good sign if we see that. So, encouraging here. Just needs to sort of, I think we cracked 320 there. I think this thing potentially could break and sort of kick on there. I think we saw, it might have been MAQ do sort of something a while back there and sort of shoot up pretty hard there. So definitely one to be watching pretty closely here.
Now, another company, Industrials, in the construction space and has good presence internationally, Reliance Worldwide. We're looking at this movement here. For the Fibonacci, it's in a light pink. We're seeing the movement. It's in 0, 100, it pulled back. But where it is now, it's surpassed that high, what you're talking about, sort of B-wave break or making new highs. It did that sort of as the market's getting higher, that sort of 15-week period. But more recently, almost halfway through that 15-week period, they hit their high and they've come back to sort of a tighter consolidation. Is this the kind of impulsive move and then corrective decline that you like to see?
Yeah, I do. Like in the past, Chris, I wouldn't have gone near this because it's sort of gone to a marginal new high, and then in the past I would call that a failure. So basically, sort of go to a new high, then fail there and ingest. But seeing there since it's sort of failed in theory, it's really gone nowhere. So we've had like 1, 2, 3, 4, 5, 6, 7, 8 weeks of consolidation there, and hold really tight. So I know sort of David Ryan has that, sort of sitting tight under the high, but I've noticed that a lot of these stocks, sometimes I'll just go slightly higher, give you that little false break, but then don't sell off and then stay nice and tight. And if you actually look at RWC there sort of historically, does a lot of these false breaks and then tight price action and then break up the past. I think might have been in 19 and 20 there or something there, did like 3 or 4 of them like this, exactly like this. went to new highs, tightened up, pushed through. So it is a stock which sort of does this quite a bit. So yeah, when you see that sort of tight price action there, and then break above your little B wave there, I think oftentimes they'll sort of keep on there. So that tight price action there is sort of probably be respected more than the false break.
And when we're looking for sort of lessons and learning from indices and other markets that have moved, you've entered the Shanghai index in here. This is one you've studied and shared with us a lot in the past, talking about lessons from indices and what they can do and how they can move. What are we learning right here?
Yeah, it's just a lot of negative sentiment there with a lot of the Chinese markets there. So I noticed last week, I mean, that Evergrande finally hit the wall last week. So that's all been, that property saga sort of been going on for like 18 months. Oftentimes, when you finally sort of get, almost the dissolvement of that company, it's finally sort of hit the wall, and
no more skeletons to come out of the closet.
It's sort of, it's kind of like that, sell the rumor, buy the fact. So yeah, it feels like a lot of the bad news is out there. Obviously, we know China was locked up a lot longer than the rest of the world during COVID there. So obviously stopped a lot of the sort of production sort of going on in China there. So the economy is definitely pretty soft here. Property sector's come back here, but might just be sort of culmination. All that bad news is really out there now. Just interesting technical level that it's come back to, that 26.35. It's had about 3 or 4 bounces off that level historically. That has been a big zone for this index there in the past there. So had some pretty good bounces from there. So been a bit of a key level, even though it's sort of broken that long-term uptrend line there. We saw one with we saw our market do something similar, Chris. We broke a bit of a trend line there, then reversed, came back up again, and then pretty went straight through it and then much higher there. So yeah, so just got to be, often they'll come back to those key technical zone, like we see there, that was an old level there back in 22, and it sort of bounced from there as well. So yeah, I think that's interesting for me is that, how unloved that is. Typically that sort of sentiment there is often the case there for those equities. So I think Van Eck got a couple of interesting Chinese ETFs and stuff there. They might be the CNU, which is a bit more of a technology one there, and the C ETF, which is more of a broad-based index sort of play there. But yeah, definitely having a look at this closely there at the moment. Haven't pulled the trigger here, but I see some sort of first high low there, some sort of consolidation there. Definitely feels like the right time to be looking at this sort of stuff.
Well, as you're saying, the last of that, or Evergrande's now come to its final chapter, its final discussion point. Does it remind you at all of, what would it be, March 2009, when the markets finally sort of bottomed, and it wasn't that the markets were getting better, it's just that there was less bad news happening, and the ISMs and those kind of reports were coming out at the time were still negative. They were still contractionary, but they were less bad. And that's where they were coining the term the green shoots. Is it possible that we could see that kind of thing happening in China, where it's not shooting the lights out with amazing reports, but it's just less bad and less bad sentiment, and that can actually trigger the markets to start running?
Yeah, I'd like to say, I mean, like that 14, that sort of 13, 14, that was a really tight consolidation, and then you broke out of that. That was kind of a bit of a more obvious sort of break. Not that I was imagining it going that high, but it did sort of break out of a bit of a range there. And I think the 1920 market there, we saw like a good little 3-wave break and a little false break, but come back in a 3-wave manner, come back near the old support line. So again, that was a pretty good level here. This is probably not as clean here. Still a bit of a nasty downtrend there. So probably a little bit more caution than the other two, but that technical zone is definitely a pretty strong one. A lot of good touches from there. Just more the sort of sentiment there at the moment is pretty negative there. So just those are sort of characteristics you normally sort of see at that sort of period. So yeah, just want to see a little bit more. But yeah, just got the signs there. Just notice that there's some decent volume, Chris, in the market off that bounce. Even some of those ETFs as well. I think might have been the Asia ETF there. I think it's about the volume. I think the volume is about 3 times the average from what I was sort of seeing there. So it was definitely some buying activity going into some of those Asian ETFs the last week or two here. So, probably 3 times the normal sort of size. So, so just definitely some value there. But it's got to follow the weight of money sometimes as well.
There's some really good insights, both on the ETFs, the market volumes, the indices, and also trading opportunities. So we say thank you very much for joining that and sharing that with us this week. Gary Glover from Novus Capital.
Thanks, Chris.